Hello and welcome. You're watching Business Today Television. This is Modinomics 3.0 special edition of Market Today presented to you by ICICI Direct. I'm Sakshi Batra. With me is Shail Bhatnagar. And it's the day after the big budget has been delivered. And it really seems something different is there with the markets, Shail, that despite such massive changes announced in the budget with respect to taxes, STT on F&O, higher taxes on both LTCG, the stock markets gave a knee-jerk reaction and then recovered all the losses nearly in the same day as well. Such is the impact of this liquidity-driven market move that we've been seeing in the markets. The recovery was even swifter than the swift dip that we saw right after the budget speech was made and the indications on these higher taxes were made. And the Nifty ending almost 400 points recovery from the day's low. The Nifty Bank was one of the indices that kept on putting some pressure on the markets post the budget speech. It shed about 500 points. HDFC Bank and ICICI Bank were the biggest laggards on the Nifty Bank, dragging the index below 52,000 mark as well. So that's something that we'll continue to watch. But while the markets also digest the budget blueprint, we will also look at a lot of earnings that will come to the fore now. Bajaj Finance, HUL, ICICI Prudential, Torrent Pharma, United Spirits, DCM Shriram and other names, these will be reacting to their earnings. And today, Axis Bank, L&T, SBI Life, they will be reporting their earnings from the Nifty 50 constituents as well. But the big question is that what will happen in the markets post-budget 2024, Shail?
Good morning, ladies and gentlemen, and there is just one phrase to describe this wonderful bounce back that we saw in the markets from a low of 24,074 to a close of 24,479. That's 405 point uptick from an intraday low, and it's liquidity, and liquidity. In the short term, the markets are slaves to what is the inflow and the outflow as far as stock prices are concerned. In the long term only are they bothered about earnings. And as far as India is concerned, Sakshi, forget the SIP of 21,000 crore rupees that you have from mutual funds coming into markets on a monthly basis. It's an equal if not more amount which is coming in from ultra HNIs, which is coming in from HNIs, retail investors of all hues, and of course institutionals and our foreign friends. So if you have 42 to 50,000 crore rupees coming into markets on a monthly basis, what is the chance that this dip will not be purchased? They have sort of hit the markets where it feels the worst. You have higher long-term capital gains tax, you have higher short-term capital gains tax, STT has been raised, indexation has been removed, there is fresh taxes on buyback of shares. You name it, they have it. And despite that, the markets are up. Frankly, it's a budget that was sort of best forgotten by the market, but we have to live with higher taxes and then carry on. And the carry on started, I think, within 15 minutes of this knee-jerk reaction, because we did not know what the date was on which these taxes will be impacted. Other provisions, there isn't much to talk about. And if you look at how the other media in terms of print papers have given their readings, it's more or less a coalition paradox, so to say.
Absolutely. So we also have special guests lined up for our viewers today to really help you understand the fine print of the budget and how the budget propositions will impact you and your investments going forward from here. Let's start off by introducing our first guest on the show with all of you viewers. Mr. Rahul Chadha, the founder and the CIO at Shikara Investment, is joining in with us. He's from New York. Warm welcome to you, sir, and thank you so much for taking the time out for this special discussion right after the budget. We'll start off by taking your own understanding of the budget. By now you would have digested all the fine print that has been flowing in till late night and early morning for you. So your sense, sir?
Yeah, so absolutely, like the way you guys said, see, nobody likes paying higher taxes, but what you've got to look at it from a global context. And why I use that word is, sitting here in US is running the highest peacetime deficits. We've seen what has happened to US bond yields, the US borrowing program, everybody's worried about. Look at what is happening in the Eurozone, the huge debt to GDP France has, nearly with about 350% of debt. We see closer to India in China. China's kind of a burden with a huge amount of debt to GDP. So I think the taxation may be obviously a near-term negative, but what market is happy about is the long-term commitment towards fiscal prudence. See, there was a positive surprise on the fiscal deficit. Most market participants were expecting around 5.1. The sense we've got from the budget is the numbers should be around 4.8, and the assumptions are fairly realistic. A nominal GDP growth of 10%, tax collection of 10%, which is likely to surprise positively. So that's a clear positive. Even again, this rural spends which have been allocated in the budget are not that high, which were expected before. The move, the work on the upgradation of the skills or the technical skills program was much needed. See, in markets, we were all focused and kind of happy with the K-shaped recovery because there were stocks which were benefiting because of that. But in a country like India, you cannot have large masses of youth being unemployed and being left out of this. So I think somewhere this budget takes care of those structural issues which couldn't have been kept under the carpet for long. So overall, it's a good budget. Near term, like the way you said, maybe slightly painful for some market participants, etc. But longer term, it's a good move in the right direction.
Rahul, Shail this side. Most of the budget which we saw was looking at the coalition that is there at the center. After 10 years, you have the BJP now heading a coalition which is supported by two large outside players, and they were also very well taken care of. How do you see this move to sort of help the youth in terms of a stipend, in terms of a one-time charge, as also the fact that now in the right strata of the society you will have more spending power coming in? How do you see that translating into equity market returns?
Yeah, that's a positive move. See, if you look at this, first these guys or the unorganized sector got impacted by GST, which happened. There was a fair bit of a dislocation. Barely had we come out of that GST dislocation, COVID hit, and COVID hit again the unorganized sector the most. So when the recovery happened, because those guys were not that much exposed to the stock markets, they couldn't really participate in that. So that's where it helps. If you look at, we've had great numbers on the growth fund. There's been solid infrastructure which has been built up. But still, again, unlike before, the job creation, you can talk about whatever, the technological innovation, etc., has been far behind. Whereas, look, we all talk about the young population, the young positive demographics, but those demographics are an advantage only when those youth can find jobs, etc. So I think that's where this whole incentive to encourage more people to come in the formal employment, to have kind of a skilled manpower. Once the FDI picks up, once the manufacturing picks up, as the businesses kind of invest in capacity build outs, is a big medium to long term positive. And to your point on how does one play this, I think clearly consumption is the best way to play this. One would look at some of the discretionary consumers, even staples should do well. See, last 2 years, because of, again, what we discussed on income, because of inflation, there was a squeeze on the consumer wallet. I think that consumer demand comes back in the coming quarters.
Absolutely, and I think, Sakshi, this was very adequately reflected in the way you saw FMCG stocks react very, very positively to yesterday's development. Very clearly, there seems to be hope that this stipend, this monthly income, as it sort of finds itself into the hands of millions and millions of youth, you will obviously see some purchases getting reflected in FMCG stocks. Apart from that, there was a very nice uptick in two-wheeler stocks. It's very hard to keep a 25-year-old away from a bike, and that was fairly visible in markets yesterday. Rahul, to the point you made about fiscal prudence, the glide path to cutting down debt as a percentage of GDP, do you think that will reflect positively on maybe softer interest rates in India over the next 6 months or so?
Okay. So before softer interest rate, what I'll say is, shall look at the currency. I mean, I've been looking at India for last 25 years, and I've not seen rupee so stable at a time when the US rates have gone up nearly 400 bips. So again, this speaks volume of the work government's done in maintaining the fiscal prudence over last 7 to 8 years. We saw what happened to the currency between 2007 to 2014 when rupee moved from nearly 45, 46, if I'm not mistaken, to almost 68, 70. So I mean, had a serious depreciation. So I think from a FI perspective, that's important because earnings growth in India are going to be anywhere between 15 to 18%. If you're not losing 5-7% on the currency depreciation, that's a big positive. So I think that is one point. To your other point, clearly this is what I view, and that's why we like some of the banks also. That with the bond market inclusion, with all that government is doing on fiscal prudence, you'll see bond inflows. You should see liquidity improve. Government borrowing is kept in check, and what it means is last kind of 12-18 months, one has heard all these kind of market participants, particularly the banks, come and talk about liquidity tightness. I think that eases considerably. So which is why what you see from now is the NIMs kind of a bottom and expand for most of these banks. What has happened in the last 12 months is because of RBI's kind of a clampdown, these banks have been going slow on unsecured loans. They've been kind of a severe and not growing that book, so that has some impact on their advances yield. So that stabilizes here. At the same time, the pressure they had on the liability also eases as liquidity gets much better in the coming quarters.
Another thing that I want to ask you, Mr. Chadha, is that you're closest to all the foreign investors right there. What was their thought once they saw the budget coming in? Will this budget propel them to put in more flows into India, something that they have not done over the last 6 to 8 months odd? And even yesterday, they were net sellers after 6 days of buying within the Indian market. Again, they have sold about 2,900 crore rupees worth of stocks in the Indian markets. Do you think the budget has enough to keep the foreign flows coming in?
What budget does is every time there's a dip in the market, it would bring the foreigners in. And why I say
Yeah.
that word is, look, the government is doing all the right things to kind of keep the economy in fine shape from a macro economic prudence, from a fiscal prudence perspective, from directing the spends to the kind of a right space. They've maintained the capital spends, etc. The consumption spends have been or the rural stops which have been given within kind of a limits, etc. So there is nothing from a foreigner perspective to be really worried about the government. They've been navigated the last month and a half of this coalition politics well, which initially people were not sure how that would play out. So that is kind of a positive reinforcement. I think what is against India is the valuations are expensive, and this is the most expensive it's been to the EM average. So that's where again, but overall, I mean that goes slightly against the market, which is why we've not seen huge flows until recently. But our view is that look, we may see Fed cutting rates. U.S. economy is slowing down. So there was some bit of an again the spends which happened because of that Inflation Reduction Act, etc., which were happening in the US. US also had, similar to India, the K-shaped economy, but now the slowdown is getting a lot more pronounced, and it's highly likely with unemployment moving up, Fed comes and cuts rate even in September. So as you see rate cuts kind of come through, overall EMs, which as a basket have seen kind of a redemptions over the last 2 years, should get flows, and I think those flows should come to India.
You know, Rahul, Sakshi and I were just discussing this frenetic activity that we've seen in India over the last 7 months or so. First, we started with the interim budget, then came the 4-month national election phase. Then, of course, we had this mad move coming into the markets. And then we have this national budget that got over yesterday. So, all of us are now breathing a little easier. But we've transferred all our stress to you. Now you are into election mode in the US. First, tell us, who are you going to vote for? Who's most likely to be the next US president? And how do you see the favorite incumbent sort of trying to influence the Fed to cut faster?
So again, lot of the questions in one. What I'll say is with Joe Biden drive kind of dropping out of the race, suddenly it becomes very interesting. So keep watching the space. It's not really a one-way bet, which most people were forecasting until last weekend. So it gets a close race from here. It's going to be close race. Let's see what or who is the vice president nominee for Kamala Harris, etc. And then we'll go from here. But it's something which will be closely watched. I think Fed's been fairly independent in their thinking, and which is what is expected also. Which is where, like the way we discussed, there was slowdown in the economy, but there were pockets of the economy which were holding on well. I think now Fed's more kind of worried about the other half of their mandate, which is the unemployment and the rising unemployment, and which is why I think the rate cuts happen from now, and that should be boost for the global economy. Because outside US and probably parts of India, we were seeing very anemic growth across the world. So I think globally, that kind of a picks up from here.
There was a surprise rate cut hoped for within July, so you have about 7 days left, and definitely 2 in calendar 2024. What's your count, and what's the extent of the cut that you see?
So I think what happens is with the way things are deteriorating. Look, the first cut would come in September. It's unlikely that it comes before that. Why? Because look, last time also Fed got it wrong that they thought that inflation is going to be in check, is going to be below 2%, and with what happened with the huge spike in inflation, they were caught on the wrong foot. So this time they're going to be extra cautious. But once they get the confidence that they're on the right side and inflation is under control, and the falling growth or the rising unemployment is a bigger concern, then they're going to move fairly quickly. Because look, from a US perspective, if you're looking at whatever 2% inflation, then a real rates of whatever 100 bips or more than enough. So somewhere it's higher or excessive by nearly about 200 bips. So we can see sharp cuts over whatever next 6 to 9 months. I think then again the question comes after that is again the US borrowing program. That in the past we used to have the likes of Japan, China, and some of the Middle East countries funding the US borrowing program. But with the kind of issuances US has, nearly, I think net issuances, if I'm not mistaken, are close to $25 trillion. Who's going to fund that borrowing program? So that ties in back to why investors like India that look, again, your deficits are under control. And let's not forget, look, we look at fiscal deficit, which is a central deficit. There's another 2.5%, which is a state deficit. So eventually we've got to go to 4%. And that's how the Indian economy has to live with. Because globally, I think there is going to be a premium for economies which kind of follow fiscal prudence. And they're going to trade at premium valuations from here on.
All right. Well, Mr. Chandran, thank you so much for being with us on this very special edition and sharing all your thoughts and insights post the budget and what it means for the markets, investors, and overall the macros as well. Many thanks for being with us with your views.
Thanks for having me. Thank you.
All right, viewers, let's get back to understanding, how the market trade setup is before we get you the next guest. And of course, the US markets have been pretty tepid overnight. We also see that the markets in the Asia Pacific have slipped, taking cues from the overnight move on the Wall Street. Earnings from the Magnificent Seven technology companies have disappointed, and therefore US markets were disappointing. And even in the Asian markets, you see the Nikkei down by about 0.1% odd, and rest of the market also sluggish in trade. You can actually see the Dow Jones, Nasdaq, S&P 500 lackluster trade in overnight session, and that followed through in the Asian markets as well. As far as the Indian markets are concerned, again, there is a likely negative note start that we are looking at. The GIFT Nifty is pointing to a negative start in today's trading session, but we'll have to see how it moves forward. Like I pointed, it's the overseas investors that turned net sellers on the Indian equities after 6 days. The FPI has offloaded 2975 odd crore rupees on the budget day, while while the domestic institutional investors stayed net buyers for the second session. They bought about 18 odd crore rupees in trade as well. But we also had some exclusive interactions going with the government representatives, the budget representatives all across last evening, and we do have a slice of some interviews for all of you to really understand when it comes to some confusion that was flowing in, what really happens within the property tax, real estate indexation getting removed. Especially our managing editor Siddharth Zorabi got in conversation with Revenue Secretary Sanjay Malhotra and began by asking him, has the indexation been abolished across asset classes, and what was the logic of the real estate related changes that have been made in the budget? Let's listen in.
Hoping to achieve from the removal of indexation for housing capital gains, and an associated clarification with, I haven't seen all the fine print, has indexation been done away across asset classes?
Absolutely. So as I mentioned to you, this is more of a simplification. So I mean, if you have indexation for real estate, why don't you have it for shares? Why don't you have it for the FDs, for the term deposits? So, I mean, all asset classes are similar. The returns, are in rupees. They are all similar returns. The incomes are in rupees, whether the asset class is real estate, gold, or anything else.
Yeah.
So it's more of a simplification that it has been done away with. However, I may clarify that indexation benefit till 2001 continues, because we had given a one-time indexation recalculation of the costs. So whatever are the costs in 2001, or the costs indexed, the cost of acquisition indexed to 2001, that benefit will continue. After that, of course, there is no indexation on sales affected today onwards.
On housing, what is the objective? What do you seek to achieve? What have you tried to simplify there? Because on unmade, it's been reduced from 3 to 2 years, the rate has been reduced, but indexation has been done away with. So what is the hope behind this move?
As I mentioned to you, it is about simplification.
Okay.
Have a simple rate. 20% is a high rate with indexation for some. If the returns are actually very high, 12% and more, this rate actually of 20% with indexation works out to more than 12.5%. Please appreciate that point.
Fair point.
So it is for most of them, it is actually a reduction, because houses, land, urban lands, residential lands, commercial lands and properties, they actually increase at rates much more than 12% per annum. And so for them, it is actually, for most of them, it is a reduction in the rates. But as I said to you, it is more of a simplification that we have tried to attempt with doing away with indexation on certain asset classes which were having that indexation benefit, but at a higher rate.
All right, so that's the clarification that Revenue Secretary made on the proposed indexation removal on the real estate space. So this actually means, in case you had a property which is before 2001, or maybe you have inherited before that time, the indexation benefit will still stay. But from 2001 to about 2022, if you bought that property and you're looking to sell it and then reap in capital gains benefits, then you may face the indexation removed in that aspect. So you have to go back to your CA to check, what is the calculation truly on that front. But that is a clarification that's coming in. Just about 2 minutes to remain for the markets to hit pre-open. Several stocks that we will be keeping an eye out on the back of earnings. Bajaj Finance, net profit up 13.8% at 3912 odd crore rupees. Total income up by about 28.8%. HUL, consolidated YOY basis, revenue up by 1.4%, EBITDA up by 2.2%. Net profit comes at 2612 crore rupees, up 2.2%, and the margins have come in at 23.8% versus 23.7%. So marginal uptake over last year's same quarter. ICICI Pru, value of new business is up by 7.8% to 472 odd crore rupees. The margins at 24% versus 30% year on year, so a dip right there. PAT is up by 8.7%. We have ICICI Securities. The total income is up by 76% at 944 odd crore rupees, and the net profit has also nearly doubled, 94.5% increase over last year same quarter. This is the consolidated numbers that we have. United Spirits, here the profit has grown by 1.7% to 485 crores. The revenue has soared by 3.5%, even though EBITDA has remained flat and margins have dropped by 90 basis points. We also have stocks like Tata Consumer Products that will be in focus because the company has unveiled the plan for rights issue that's aimed at raising up to 3,000 crores. The company intends to issue 3.66 crore rights equity shares totaling 2,997 crores at about 818 rupees, representing a 35% discount as well. So those are some of the stocks that we are keeping an eye out on, Shail.
9 a.m. ladies and gentlemen, the pre-open is upon us. It's a fairly volatile Nifty for the moment. Let's just take the green tick, 17 points higher, 24,489. Remember the battle yesterday was for 24,500 after almost 24,000 was tested. So one of the learnings that I have from the market we'll discuss around 10 a.m. before we call it a day on this particular show, but fairly volatile. Let's look at the couple of earnings boys that are coming in. It's an unbelievable downtick on Bajaj Finance, 5% lower, 336. We'll wait for this price to particularly settle down. Let's look at Hindustan Unilever, 33 rupees higher, 2800. This is heading for a record high. We had discussed this about 2 weeks ago when the first up move in FMCG was noticed. Remember, it's a 4-year wait for long-term shareholders of Lever to see this kind of pricing, and this is backed by a fairly modest uptick in quarterly performance. Let's look at some other stocks which are moving in tandem. L&T, about 1% higher, 35.68 as far as prices are concerned. Reliance is down 1.6% at 29.27, and you have a downtick on Tata Motors, down 1/3%, 999. The Nifty settling about 44 points lower, something that you had seen on the GIFT Nifty as well. What we'll do is we'll shift immediately to the NSE 500 and look at stocks which are moving as far as cash markets are concerned. Let's look at the gainers first. No surprise there. Sakshi, Suzlon. Again 5% higher. It was a 5% uptick even yesterday, 60.7. About a month ago we had discussed Suzlon on the very long term charts as far as the monthly picture was concerned, and at that point I had mentioned that these are possibly good times for long term shareholders, and that's getting reflected pretty well. There's no stopping Andhra stocks. KNR Construction 4.4% higher, 374.45. Muthoot and Intellect Design are up 1.5 and 2.7% respectively. A green tick that's seen on ABB India Limited, 2% higher, 76,600. And let's just look at a quick one on FNO. The Nifty is now down 50 points. Okay. Top gainers, Trent 5375, 2% higher. Let's look at what this one is doing. Tata Consumer. I'm just requesting the PCR to kindly please fire the chart of Tata Consumer. This is something which is really old world and very good. Yes, 1% higher, Sakshi. A rights offer. In this day and age, you just float a QIP, decide 1 week before, give a board meeting notice, and you have a QIP. But this is the right way to raise money so that existing investors can also participate in the future of the company. So a 3,000 crore rupee rights is about to open, and Tata Consumer, already near a record high, is getting better and better. So these are the prices that we have as far as markets are concerned. I'm a little bit apprehensive about how Bajaj Finance has reacted. Still 77 rupees lower, 66.49. Remember, tomorrow is the monthly expiry for July, and one of the sheer underperformers of the FNO space has been Bajaj Finance, not only for July but for several months into. Sakshi, the bull market hasn't approached Bajaj Finance for quite a time.
Okay. Okay, let's look at a few more brokerage houses reports that we have for the day. Nuvama has come out on the budget with a report says that don't think the budget would materially affect or alter the direction of the markets. They do believe earnings are likely to be key drivers, where they believe the momentum is fading, and they also warrant a quality bias and prefer consumption over capex related stocks. Now on the budget, CLSA has also come out with a report. They believe employment subsidy plus small cut in taxes in the new regime will be supportive of the affordable discretionary demand like QSR, consumer durables and two-wheelers, and therefore we've actually seen upticks coming in yesterday on both the two-wheeler makers from the auto pack, the consumer durable names, as well as some QSR related names that we will check today. However, they believe lack of indexation negative for premium real estate players like DLF, Oberoi and Macrotech, and therefore you see the real estate stocks in fact taking the biggest knock as of yesterday, and even today stocks like DLF, they are down by about 1%, although Oberoi Realty is opening flat with a positive bias. Let's also pull up Macrotech to see if there is any impact of the indexation benefit removal for the last 20 years or so in the markets right there. Let's pull up Macrotech also and see. Yes, there's a 0.7% uptake, so not too much of a disappointment on that one. UBS has come out with a report on banks post the budget. They believe the bank deposits remain relative, the relative attractiveness is enhanced. Also, the focus on MSME segment could definitely help the banking space in the short term. They believe HDFC Bank is better placed. Federal Bank also they are positive on. They have a buy on IndusInd Bank, but they have a neutral on Axis, Kotak, Bank of Baroda and Bandhan, and they have a sell rating on State Bank of India right now. On HUL post earnings, we have a CLSA downgrade to hold with a target price of that's been cut to 2,161 from 2,261. So 100 rupee cut there, and they've also cut the estimates by 4 to 5 odd percent. They believe the Q1 was below their expectations. Goldman Sachs has downgraded Dabur. Yes, so HUL is down by about 0.5% right now in the pre-opening trade. On Dabur, Goldman Sachs has a downgrade rating to neutral. The target price that they have given is 630. They have said that there's a 0.4% cut on this one. They believe the direct rural consumption stimulus is missing in the budget, and therefore they see no significant incremental positive from the budget announcements that can accelerate the demand in the rural economy, and therefore they have a neutral rating on Dabur. Again on Bajaj Finance, Bernstein has a downgrade rating to underperform. They have cut the target to 5,700 from 6,800. So a sharp downtick in the target price that they have done on Bajaj Finance. 1.8% lower for Bajaj Finance at 6610 right now. They believe asset quality gets added to its list of woes. Higher levels of credit costs has increased. They also see challenges in the lender's ability to maintain the growth and the ROA targets going forward from here. Those are the key reports that I have, Shail.
We'll focus also on ITC, ladies and gentlemen. Remember, this was the second best gainer as far as the Nifty is concerned yesterday, up about 5.7%. Reasons were very simple. The government, while it did not spare retail investors from raising taxes, it did overlook ITC for a while. And that was a sigh of relief as far as ITC shareholders were concerned. And the stock rallied very, very sharply. The all-time high for ITC is 500 rupees, almost 499.7. This was in the week for 24th July. See the symmetry in the market, Sakshi. Exactly 1 year later, you will see a record high happening again. The record high was, like I mentioned, 499.7.
500 is coming.
Yes, not only that, but you see what has happened is that now you have a tailwind. You have a tailwind of being spared the rod, which means no taxes, no higher taxes were employed. You have money coming in the hands of youth, while it's a bit perturbing about the main business of ITC. But for an analyst tracking its share, it essentially means that consumption of cigarettes will rise. Good, bad or ugly, I don't want to get into the argument, but ITC is something that you need to keep an eye out on, and it's a no-brainer that you'll see a record high coming in. fairly soon. It's just inches away, and even beyond that you'll see a lot of strength coming in. Remember, just 4 weeks ago the price was at 421. So at 421, which is also the partial offloading price of its UK parent BAT, the stock was going a begging about in the middle of June. So this is something that you have to look. And before markets open, Sakshi, one point I'd just like to make, two experiences. The one, I'll request the PCR to fire a long-term chart of the Nifty. Two experiences, 3rd, 4th and 5th June, and 22nd and 23rd of July. The dips that are being purchased, ladies and gentlemen, are marking a paradigm shift into how Indian equities are likely to continue their modest uptick given the liquidity that is coming into the market. So while yesterday's knee jerk was because of taxes, additional taxes, the knee jerk on 3rd, 4th and 5th of June was because of disappointment in the market about how the BJP fared. But in its wisdom, and we have to respect this wisdom from the market, it's taking these hurdles in its stride and buying the dip. So please keep this in mind if you're trying to short the market. This is not something that is even a weekly short, which essentially means that you try to play for a 1 week downtrend. Even that is not happening. So an intraday fall and then it's back up. Yesterday's recovery was dramatic, to say the least.
Absolutely, Shail. And what we'll also do is, viewers, we'll also keep an eye out on the entire defensive space. So remember, there were some ticks higher on the IT, on the pharma pack also yesterday. So we'll see if there is a follow-up buying and whether the market nature is shifting towards defensives rather than the capex-driven stocks, the momentum stocks, the stocks that had been performing in the market up until now. Will that flavor change is something that we need to figure out. In the pre-opening trade, we have seen a settling of level of 24,444 on the Nifty, down about 34 points, 0.1% lower. The Nifty Bank at 51,657, 120 points lower in trade, about 0.302% loss right there. Within the markets and the sectoral action, it's a divided sphere. So when we look at FMCG, pharma, when we look at metals, PSU banks and consumer durables, and also the media space, they seem to be opening into the green, along with small caps and the Nifty small and mid caps, as along with the Nifty Next 50 stocks. What still looks to be opening in the red is the banking space. All the constituents of it, barring the PSU banks, realty, IT and auto seem to be opening subdued in trade today. The top movers as have settled on the Nifty are Dr. Reddy's, ITC, NTPC, Wipro, SBI Life, L&T, Grasim and BPCL. While on the losing side, you have Bajaj Twins, Bajaj Finserv and Bajaj Finance, Power Grid, HDFC Life, HUL and HDFC Bank as well. So those are the kind of names that we're getting at. Even on the PSU space, there were some winners yesterday, stocks like BHEL, NTPC. We'll see whether the flavor continues there. And of course, the shipbuilder stocks with some, announcements coming in on the leasing of the ships as well. So that is something that is likely to be in focus. We'll see whether shipbuilders like Cochin Shipyard, they continue to move. Yesterday, they were up by about 2% odd. Today, it's a flattish to a negative start for Cochin Shipyard. We'll also look at the entire basket of GRSE, Mazagon Dock. Mazagon Dock is opening with some ticks on the higher side. The other spaces that were in focus as of yesterday were the gems and the jewelry space stocks like Titan, Thangamile Jewelry, Senco Gold, after that customs duty was reduced. So we'll continue to keep an eye out on whether the gold stocks will also continue to perform. Flattish with a positive bias opening for Titan right now. Thangamile Jewelry is opening 3.5% higher at 1950 in the pre-opening trade. Not Sanco, Senco Gold is something that we need to look at PCR. We need to change this one. to Senco Gold. That is the latest entry into the jewelry space. So the entire space will be a key to watch. However, some of the other stocks, agri-focused stocks performing is something that we will continue to do. Remember, it's the seafood that has seen a reduction in the customs duty as well. So all those Avanti feeds kind of stocks will again be something that we'll continue to watch out for, Shail.
Right, ladies and gentlemen, we are at 9:14. This is about 20 seconds away from what the prices are. And let's see how the markets react. I think we are back to the earnings theme that is was the underlying momentum for the month of July. It's just that in the election year, the budget sort of gains precedent in this month, because that's what's the national document that one is looking for. And personally, Sakshi, I think it's time to look at debt funds. Last night was spent burning midnight oil and finding 2 or 3 good ones, and we'll be sharing those names. We have the prices right in front of you. Nifty down 28. There is a green tick on IT index. So this is something that I wanted to mark. 85 points higher, 40,100 on the Nifty IT index. Nifty Bank, because of its weekly expiry, opens 202 points lower, 51,550, and of course the Nifty 500 is also down about 15-16 points. Let's look at the one stock that I have in mind as far as the results are concerned, Bajaj Finance. This is not looking good, 2% lower, 65.85. Let's look at Hindustan Unilever, 12 rupees lower, 27.57. This were the earnings boys in the top index heavyweights. Now let's focus on the 3 big ones. 5 rupees lower on HDFC Bank, 16.13. Let's look at Reliance, 15 rupees lower, 29.61. Let's look at Infosys, in the green, 18.36, flat almost. What else is in pain? Because of Bajaj Finance, you have Bajaj Finserv quoting 13 rupees lower. Kotak Bank is down 8 at 17.60. You have ITC. Well, that's the shining star, and you have a record high, and you have a digit change as well. 500 for you, ladies and gentlemen. This is something that the market has appreciated, and you have ITC as the top gainer as far as the index heavyweights are concerned, 2% higher. We'll take a very quick detour into NSE 500. Let's look at stocks in the most active list, which are PSUs. Okay. IRFC 1% higher, 195.90. You have RVNL down 0.2%, 587. You have HAL, Hindustan Aeronautics, third of a percent higher. Sakshi, jewelry stocks are doing well. Titan 1.4% higher, 35.16. Mazgaon barely in the green. Telecom is buzzing. Tata Tele Maharashtra 3.8% higher. Let's look at what Tata Consumer is doing. I am requesting the PCR to fire Tata Consumer, whether it is in the top gainers or not. No, I don't see it. What I see clicking is United Spirits 2.8% higher, 1369, and of course who can stop RECL 1.7% higher, 606. Muted kind of a sort of response on the second day as far as the main indices are concerned. Let's look at the broader picture. You have a very smart move coming into Nifty 500. Remember, it had opened down, but the broader picture looks very good. 2:1 is the advanced decline ratio. 1400 stocks in the green, 600 in the red. Sakshi and I tracked 19 indices for you. Out of 19, 9 are in the green, led by the small cap and the Nifty Alpha 50. So that's what the story is, ladies and gentlemen. The broader markets are rallying from NSE 500 to the small cap space, but the main indices Nifty and Nifty Bank are muted today. Sakshi.
Small caps is where the action is picking up pace. You did talk about Telecom, Shell, and now Tejas Networks, Tata Tele, HFCL. These are the stocks that are moving higher in trade. Then you also have sugar space that's in the green. Sri Renuka Sugar up 3%. Balrampur Chini is buzzing within the F&O space as well. Then you also have Great Eastern Shipping now up by about 1.7%. And we'll see if the momentum follows through in the other shipbuilder names like SCI, Shreyas Shipping. These were the second rung of the shipping stocks that had not moved as much as Cochin, Mazicon or GRSA, and now it's the momentum that's flowing through these. Even the railway stocks like Titagar Rail, that's up by 3%. Ircon International is opening about 2% higher in trade, so that's where the action is also shifting. Apart from this, Raymond is again up by about 2%, so we'll continue to focus on that one. Then we also have stocks like Firstsource Solutions, Intellect Design, again from the IT space, that continues to see some focus coming in. From the chemical space as well, Himadri Specialty Chemicals is opening higher. Chambal Fertilizers is a buzz in action in the F&O space as well. So that's the space. Indian Hotels, remember this was a stock that was rallying sharply with the tourism buzz that came into the budget too. So that continues to move within the F&O space even in trade today. So those are some of the stocks that are buzzing. Consumer durables are now picking up pace. The index has moved to the top spot among sectors, and you do see stocks like Kalyan Jewelers again, so 4% higher. Again, the jewelry space, Titan, these are the spaces that are continuing to move up. But within the consumer durable space, you have V-Guard, Voltas, Blue Star, Amber Enterprises, Century Plyboards. These are the ones that are showing some traction as of now, Shail.
Right, ladies and gentlemen, Nifty trying as it can to move into green territory. Let's just look at how prices are moving as far as the pullers and draggers are concerned. This is shaping up pretty well. ITC top contributor, 30 points to Nifty's tally, even though Nifty is in the red. Actually, what's pulling the Nifty lower? It's a 0.5% cut on Reliance, which is contributing 17 points to the downtick. Lever is contributing 8 points to Nifty's red color, and Bajaj Finance is contributing 6 points to Nifty's red tick. Tata Consumer, because there is an equity dilution, ladies and gentlemen, please understand that it's down 2% at 1231, but this will recover. There is absolutely no reason why you should have this kind of a move. And Sakshi, defense is on the offense. Look at how prices are moving for BEL, 1.4% higher, 305. Hindustan Aeronautics has got its mojo back, 1.3% higher, 49.24. You have a decent green tick and on Cochin and Mazgaon, and BDL is 1.1% higher. Taking it away is, ladies and gentlemen, Titan. This was the second best. This was the top gainer in the Nifty, top gainer in F&O yesterday, and it's sort of taken up upon itself to reclaim its past glory. I'm requesting the PCR to fire the long-term chart of Titan from the tailwind that it has got because of this benefit from the government. Well, it broke past 200-day moving average yesterday, and the all-time high is 38.76. This is not to say that 38.76 is coming anytime soon, but remember that's the trajectory of this move, because customs duty is cut and record high gold prices were creating a hurdle in the minds of retail buyers to buy jewelry, and that seems to have been taken note by the government, and Titan is the biggest beneficiary. It's not only Titan, it's Thangamile Jewelry, it's Senco Gold, it's Kalyan Jewelers. There are 2 or 3 other jeweler stocks which we don't mark, but these are the 4 major ones that you should keep on your radar. Thangamile, Kalyan, Titan and Senco. Senco is the one which is the latest kid on the block. It got listed last year. If I remember right, I saw 4-digit on Senco, 1100 or so. Let's see what's the price. Okay, 990. So this is a broad theme that is running in the market, and of course I just also like to mark 2 space related counters, Avantel and MTAR Tech. If we can see those prices coming in, those are the ones that are going to benefit from this 1,000 crore rupee fund that the government has set. It wants to increase the space economy by 5x, Sakshi, and this is a broader theme that's again opened up. 923, Nifty is flat as flat can be. You have a 100-point downtick on Nifty Bank at 51,677. IT is in the green, and so is the broader market on the NSE 500, 35 points higher, 22,900 for you, Sakshi.
All right, we have our special guest now joining in. Mr. Amit Gupta, Senior Vice President and Fund Manager at ICICI Securities, is now with us. Warm welcome to you, and thank you so much for joining in on this special broadcast, sir. A day after the budget, the markets have opened subdued, but there are several below the surface moves that we are looking at. The gold space is in the buzz with that customs duty that got reduced. Even the frozen foods category, seafood category, Apex Foods, Avanti Foods, these are the kind of stocks that are buzzing in trade. Some shipbuilder stocks are abuzz, defense stocks making a comeback slightly and slowly and gradually, FMCG. Where would you keep your focus right after the budget now? Does anything change in the terms of strategy that you had into the markets?
So I think, see, the trajectory remains the same almost. That if you look at the interim budget also, the same 11.1 lakh crore of allocation in the capital expenditure, it has continued. Roads, railways, almost same allocation of 2.8 lakh crore, 2.6 lakh crore actually correspondingly has maintained. In fact, in defense, it is 1.7 lakh crore, which is almost 6-7% jump actually year on year. So we feel that these spaces, with some consolidation, because obviously they have run up before the budget, there may be some normalization of price to earning, and then the next leg of growth is going to come in these sectors. What is coming up, I think now as you are seeing ITC or United Spirits, some of the consumer names participating, we feel that some tilt of the portfolio towards consumer actually is warranted, because the central capex continued, but the state capex, I think that is what we need to see going forward, because we have seen some freebies announcements also coming from certain state governments, and going forward you have the state elections also. I think from the consumer space, consumer discretionary space, we like liquor as one of the segment where United Spirits come. And we feel that if you see the top 50 lakh people, in terms of the top end consumer, expenditure, then that is going to be 2.5 crores now. And this is where we feel this K-shaped recovery, which is very sustainable actually right now. And the money expenditure from the high end is growing very fast. I think it will likely to come into the premium segments. So the companies which have moved into more premium liquor, like United Spirits, they are going to gain traction going forward. In fact, when we look at, from the China perspective also, one of the biggest Chinese company, because in China also you had the K-shaped recovery, one of the biggest liquor company in China that gives a profit of $10 billion and a market cap of around $300 billion. So I think it is coming up in India slowly now, because states are not putting ban. In fact, they are following what Uttar Pradesh government has also done. Uttar Pradesh, if you see, 17,500 crores of excise duty was there in 2017, which has actually increased to 50,000 crore. It's remarkable, because what they have done, they had only one wholesale dealer. Now they have 100 wholesale dealers in the liquor space, and they have the very good retail chain. So I think this brings transparency, this brings more revenue generation for the state governments, which they need right now. And that is where it is good for the companies also catering into these segments, along with the premium segment they are catering to. I think this is something which is coming to the benefit of these companies now.
Fine. Namaste, Amit ji. A very warm welcome to you. Of course, Sakshi and I were able to join the dots as far as ITC was concerned. Next to no hike in the syntax, and of course, more money in the hands of youth. Therefore, we sort of were able to get into this theme for cigarettes. But yes, liquor is an obvious miss, and you've pointed out Radico. How about the two MNCs, United Breweries and United Spirits? Both of them near or at record highs?
Yeah, absolutely. So as I mentioned about United Spirits, because we feel that, if you look at from the trajectory of the liquor consumption in India, so we have seen that every year, almost 1 crore individuals are coming who are consuming more. So it's a big number which has come up actually in this domain. And these companies, they have the promoters from outside. So Diageo is the promoter in United Spirits, and we feel that they are well equipped to come out with more premium segments now in this space. And also, if you remember, you mentioned about Radico Khaitan. If you remember, one bottle they had sold at 5 lakh rupees actually previously, right? So you can go to any premium segment in this space and just think of the raw material, right? So in the raw material side, you have a distillation process only, whether you are selling at 50,000 or you're selling at a lower. It's only a matter of time that you are spending with the with the that particular material. So you can be 100 days or it can be 500 days, but the same distillation process. And just imagine that you can price the bottle at any extent now in the market. So you can assume the margin expansion going forward. Yes, ethanol, if whenever the government increases the ethanol prices, that is something which, comes up. But eventually the road is open for the output price to increase when we are talking about more K-shaped recovery.
Gupta Sahab, I don't think so. Aspirational India is ever bothered about the price tag, but for people like me and for those who are viewing us, I would imagine buying a stock for all the liquor companies put together would be far cheaper than looking for a bottle at 5 lakh rupees.
Yeah, sure. So, I mean, you rightly mentioned, but yes, the what we feel is that the more sustainable consumption story in India is the high-end discretionary right now.
Yes.
If you look at the mass consumption, yes, government has cut down the income tax. They are trying hard to create jobs. In the economic survey also, almost 80 lakh jobs are required to be created because the workforce is rising in India. We feel it's a task to be achieved going forward. Manufacturing push, mostly in electronics, we have seen PLI has been very successful. So it will move into other sectors, the remaining 13 sectors also. And that is where when the job creation starts happening, then you start talking about more mass consumption coming up or the rural segment coming up going forward. So I think for the timing, for coming 1 or 2 years, the more sustainable consumer theme is the premium segment theme.
Okay. So I also wanted to ask you, where would you avoid investing post the budget now? Is there any space that you believe a lot has been done and dusted, no more value to be seen there, and you'd rather stay away?
So I think, those who have run up very fast, we need to be a little careful. Obviously, the railway stocks had run up very fast. I think it demands definitely some consolidation. In fact, we can move the money into those sectors. If you look at critical minerals, for example, so critical minerals was something where the government has again worked upon actually in the budget. I think if you look at the companies like Hindustan Copper, so there is a deficiency of copper definitely in the world, not only in India. So if you see manganese ore, that is another segment which is coming up, even coal. So they are available at a much relatively better valuations, right? NMDC is available at a better valuation. So we feel that if one has to remain in the PSU space, they need to change into more attractively valued segments now, because the government has not changed their stance from the PSU perspective. They have not gone into disinvestment. So they feel that more productivity is required. So they are just giving the direct orders now to the PSU companies, and also the dividends which are coming up from there. So the government wants to continue with it. Now, as a fund manager or as an investor, you have to change the guard sometimes when the valuations are very rich and try to move into other segments where it is more attractive.
All right, Mr. Gupta, thank you so much for your time on Business Today Television and sharing all these insights for our viewers post the budget. And we'll hope to catch you soon on Business Today and on Market Today yet again, once we digest all the budget news and look forward into the earnings and many more triggers that will be following in soon. But viewers, we now have two more special guests joining in for you. First up, let me welcome Mr. Gaurang Shah, now who is joining us, Senior Vice President, Geojit Financial Services. Warm welcome to you, Gaurang, and thank you so much for taking the time out. Well, first up, I have to take your first take on the budget. A lot has been taken in. What did you like and what did you not like? Could you unmute yourself, please, Gaurang? We couldn't hear you.
I always have this difficulty, managing my mute and unmute. I'm so sorry. So thank you
You
so
know,
much for
Gorang,
that. Yeah, please go ahead.
this is Shail this side. For married men, it's not a problem. Mute is default.
You are absolutely right. So thank you very much for having me on the show, Sakshi Shail. Morning to you, Sakshi. Morning to my good friend Shailendra Bhatnagar, and to all the viewers of BTTV. Before I answer your question, in the next 6 months down the line, you are going to ask me the same question because in the next 6 months we'll have another budget.
Yeah.
So I think we have to take it in its stride. I think budgets according to me, okay, this is my personal opinion, Sakshi. I could be wrong over here, and I stand to be corrected. I think according to me, budget is possibly an event for the market for that particular day or possibly the next day. Second day onwards, I think we put all this thing in the backdrop, possibly in the deep freezer, and then we start looking at earnings, where the GDP growth rate is. Is there a possibility of interest cuts, where the inflation numbers are, so on and so forth. So, and to answer your question now, I think, honestly speaking, I think the Honorable Finance Minister has ticked all the boxes right, and I don't see anything negative as far as the budget is concerned. It's a growth-oriented budget, and I think it is a budget which is possibly focused on agri and food security going forward from here on. Uh, One can argue about short-term capital gains tax that has been increased. One can argue about the STT increase, but I think we'll forget all these things and possibly. And if I have to take just one cue, Sakshi, we were down almost about 1,200 points yesterday at one point of time. We recovered and we were down just odd about 70 odd points. Had the budget been so bad, I think we would have been down and out. We wouldn't have recovered.
गौरांग, एज यूजुअल नमस्कार, स्वागत है आपका और आपसे अब चर्चा करते हैं बजट के बारे में. It's best forgotten as if you are a retail investor. They've hit you from all sides. If you invest in real estate, the indexation is gone. If you are a short-term trader, STT is doubled. If you are a long-term investor, LTCG and STC is also enhanced. It's just liquidity which is keeping us afloat, and the undying faith that investors have in this India growth story. I think it's been taken advantage of by the finance ministry, and you've come up with this kind of a budget. Be that as it may, our job is to sort of find good stocks. Our job is to sort of remain long-term investors and ride this wonderful bull market that continues to unfold upon us. After reading the fine print, maybe one or two stocks that your research team has picked out which might outperform broader markets.
बहुत बहुत धन्यवाद शैल भाई, आपको सादर प्रणाम और फिर से शुभ प्रभात हमारी तरफ से. टू स्टॉक्स, दो अलग अलग क्षेत्र के. अगर मैं सरकारी बैंक को ही ज्यादा महत्व दूंगा शैल भाई, क्योंकि हम बजट की बात कर रहे हैं, तो मेरे ख्याल से अनिवार्य होगा कि हमारा विश्वास कितना मजबूत और बुलंद है सरकारी कंपनियों पर. तो एक है इंजीनियर्स इंडिया. बहुत पुरानी कंपनी है. दिस इज अ वेरी ओल्ड कंपनी फ्रॉम द स्टेबल ऑफ गवर्नमेंट ऑफ इंडिया. Is into almost, if I'm not mistaken, they are into about 8 to 10 different business verticals.
Yes.
Right from power transmission to complex turnkey projects, hydrocarbon, water and waste management, nuclear science, green hydrogen is going to be a big theme, Shell. This company erects the infrastructure which enables production of green hydrogen. I think it is about 260 or 250. I don't know where it closed yesterday. 350 plus targets looks inevitable on fallback of earnings visibility. These are approximate targets, keeping in mind the diversified business that Engineer India has and possibility of it translating into profits and top line. So first one is Engineers India, and the second one would be Power Grid. We've discussed this particular story. I think it was at 340 plus Power Grid.
Yes.
We could possibly see levels beyond 370, 380 from a long-term point of view. Again, this is again purely because of the power focus and green power and green energy that was spoken about by the Honorable Finance Minister yesterday.
Okay, let's also welcome Mr. Rudra Murthy, Research Head, Vachana Investments, on the panel discussion with us. He's joining in. Good morning to you, Rudra, and thank you for taking the time out. Well, your first take on the budget, how would you describe the historic 7th budget that Nirmala Sitharaman has presented yesterday? And on a scale of 1 to 5, how would you number it?
Yeah, Sakshi, good morning. Thanks for having me in the show. See, for me, if you take out the taxation in terms of STCG, LTCG, STT, and all this stuff, I will rate this budget as 4 on 5. But if you include all this, I will rate the budget on, let us say, for 5, I will give 2 points, or even maximum I can give as 3. I also feel like there was no need to tinker all this stuff in order to garner only about 30,000 crore from all these changes what they have done. And personally, I was not still of the view that you have to increase the STT or make changes in LTCG and STCG to garner that fund. In fact, government has enough money through other sources. See the tax collection in the form of GST. Look at even the RBI surplus dividend, whatever they just got. Also look at collection in direct taxation has gone up 20% from last year to this year. So a lot of funds are just coming in for government, and even fiscal deficit is definitely under check. In fact, yesterday you could see Moody saying that they will upgrade if the government is able to maintain their fiscal deficit or even bring down. Nirmala Sitharaman very clearly told she will bring it down to 4.5% for financial year 25-26, and also further lower it in coming days. And she was also very clear that in terms of the government borrowing and also the debt burden, they want to ensure that they come down over a period of time. So it was definitely a good budget, but just making this tinkering of STCG, LTCG and all, and even this STT increase was not warranted is my feel. But keeping this aside, the fiscal prudence, the consolidation towards that 4.5% to 4% fiscal deficit, what they're maintaining, and the overall tax bracket which has just got widened compared to what it was before, and hardly that 17,500 rupee tax benefit given to salaried class people was not something so big. And they're just trying to make people come to the new tax regime from old tax regime, and already even before budget, 2/3 of the people are already in the new tax regime. So for me, overall, keeping all these things in mind, I still say yes, it was a good budget, undoubtedly focusing on growth, and they are very clear they want to keep the fiscal prudence in check. The budget focused more on capital expenditure than on revenue expenditure, which is again good. But only thing is, these tinkerings in tax was something not warranted, but still market is highly liquidity driven, and right now being in the right sectors and right stocks are very, very important. And 3 sectors, if I have to name, which is good even at current level, will be number 1, IT. Number 2, it will be FMCG. And if I have to pick the number 3rd one, it will be pharma. So stay only with pharma, FMCG and IT. And also the results which have just come from these sectors up to now, if you see, definitely they are very good. Even in our last discussion, I was definitely telling you before budget that yes, these are 3 sectors which will do good, which have done good in last 2 months, and which will continue to good even from here. So look at even stock specific in these sectors. When it comes to IT, look at Infosys, look at TCS, results were good, and still there is a lot of legroom space even from current market price for Infosys and TCS to good from here.
Right. Mr. Murthy, I was just speaking to a very big investor in the markets last evening, and obviously I can't name the person on air. But his phrase to describe the budget was best. He said, as far as investors and the middle class salaried individuals are concerned, it is one simple line: Iodex maliye, kaam par chaliye. And that is exactly how it's panned out to be. And obviously both you and Gaurang have somehow in your conversations also echoed that sentiment. Now, Mr. Murthy, staying with you, tell us one large cap, one mid cap, and one stock from the three sectors that you mentioned, which might outperform markets and are looking good on the charts.
Okay, so I'll name the stocks which I was doing in my conversation. Yes, from IT, two large cap I'm giving you, Shailesh. One is Infosys and two will be TCS. And if I have to pick from FMCG, even at current level after yesterday's up move in ITC still looks good. If you want to pick two more from FMCG, it will be Hindustan Unilever and Tata Consumer. And from Pharma, if I have to pick, I'll be betting on Sun Pharma and Dr. Reddy. And if you want me to pick a mid and small cap kind of a stock which can still do good from current level, one is Genesis International and two will be Hariom Pipe. So for me, there is valuation comfort and also still long way to go for these two stocks. So from mid and small cap, I'll be picking Genesis International and Hariom Pipe. So I've given more than the one stock what you have asked for.
Okay. Infosys, TCS, ITC, HUL, Tata Consumer, Sun Pharma, Dr. Reddy's, Genesis International, Hariom Industries. So those are the kind of stocks that Rudra has shared with all of us. Let's get in Gaurangji into the conversation. Gaurang, from here on, where do you think the outperformance can lie for the second half of the fiscal year? Largely, the big events that were to come have already come. Two budgets, one elections are out of the way. Probably, I do not know if there will be as much an impact of how the US elections really shape up. The eyes will also be on how the US Fed, how quickly the US Fed moves on the interest rate front and what happens back home. But looking at this scenario, what will outperform?
So before the US elections, we'll have to react to various state elections, Sakshi, at our. So, I mean, and of course, US election, I think the way the things are developing over there, I think because between the Democrats and the Republicans, there's going to be a huge war of words. So that we'll possibly be discussing near to, because I believe November 5th is the date for the elections, presidential elections in the United States of America. Having said that, well, I think what sectors I will still be positive on defense, I will still be positive on power, capital goods engineering, infrastructure, and railway related stocks. Though the budgetary allocation for the defense, according to the market experts, was a little bit lower than what was provided for by the Honorable Finance Minister yesterday, but there is a lot of opportunity in the defense. And my sense is that agri-related stocks should also not be off the radar. I mean, this is not a recommendation, Sakshi, but some of the stocks which could do well, which are associated with agri activities. So you have names like Kaveri Seeds, you have names like Chambal Fertilizer, Coromandel International. These two names which I'm going to mention is basically enabling irrigation for the agri sector, and those names are, this again I'll repeat, this is not a recommendation, but just a name which is strong, Shakti Pumps and Roto Pumps. I think these two companies could also be kept on your radar.
Okay, so we have Power Grid, Engineers India, Shakti Pumps, Kaveri Seeds, and Chambal Fertilizer, as also Coromandel, 6 that you've highlighted from the budget. And all 6, ladies and gentlemen, we've been tracking for the last many years. Shakti Pumps already has sort of appreciated 2x over the last 6 months, so we'll just maybe pause our horses there. But Mr. Rudramurthy, to you, Chambal and Coromandel, how does it look on the charts?
See, Shailesh, yes, both are good stocks. Definitely one can have it in their portfolio. And for me, Chambal Fertilizer, strong supports are there at around 450, 460 zone. And even at current market price and down dips to 450, 460, you can add that. And when it comes to even Coromandel, yes, this is one stock which you can still consider as a large cap and a stock which is available in F&O. So for me, even Coromandel is a stock one can definitely buy at current market price. These are two good stocks you can definitely have in your portfolio. And on chart, yes, around 1570, 1580, you have strong support for Coromandel. So definitely these two are buys. But I am very cautious on PSUs in general. But however, when I heard just now, few stocks like, let us say, where still I see valuation comfort in Power Grid, or let it be ONGC, Coal India, these are stocks still in PSU you can remain. Even for me, oil marketing companies like your HPCL, BPCL, IOC has some valuation comfort. But however, I am again underlining, which I even did it before budget, you please look at railway stocks in general. You please look at even your defense stocks, shipping stocks in general. These have gone up 10 times in last 1 year, and their profitability have just not even doubled. I'm not telling these are bad companies. I'm only trying to tell you that there is no valuation comfort whatsoever in these stocks. And because of low market float, these stocks have gone up too much. And unless you have next 5 years time frame from today, if you are a person who says next 5 years I won't see the stock market, I want to buy these stocks and hold on, then okay. Or else definitely it is a time to book profits, especially in defense stocks. Whether you name any of those names like HAL, BEL, and even looking at stock names like your Garden Reach Shipping, or let it be even stocks like your Masgov Dock, all these have moved up too much into shorter time. In fact, if you want to stay with railway theme, switch to IRCTC from your RVNLs and all other railway stocks, Titagar Wagon, all that stuff. Move to stocks like IRCTC, where still you are in the railway theme and still you are in a PSU stock where you have valuation comfort. You want to move to power, look at Power Grid. You want to move for still PSUs, look at PSU bank like SBI. So for me, you have to be very stock specific, and in general, PSUs have run up too much compared to their real profitability, and you may not get an opportunity to exit even some of these stocks because of low float if you are considering them at current market price to buy. But if you are already into it from long time, this is the time to at least partially book profit and switch to stocks where you have valuation comfort in PSU. And for me, in PSU, if you want to stay, look at SBI, Coal India, ONGC, Power Grid, and if you want to pick OMCs, yes, BPCL, HPCL, but in general, avoid railways and shipping and defense stocks.
Okay. Since you're talking about defense and shipping, the best person is with us on the screen, and that is Gaurang. Gaurang, post the budget, would you still have the same belief in the defense and the shipping names that we've been discussing from the last 5 months odd, repeatedly week on week, and we've celebrated each and every incremental level that you have shared with us on names like Cochin Shipyard, on the 5 Pandavas that you've shared from the shipping and the defense space with all our viewers every time?
You know, I love it when there is pessimism on the street. My becomes much more stronger. So that's where I approach investments. And you know, nobody talks about investing in defense or any of the other sectors from finance perspective. Whatever companies are associated with defense and likewise with power and all that, these companies take a longer gestation period in terms of executing the order book, because the equipment that they manufacture is of very high technology, very precise and complex in nature. So you need to have 3-year, 5-year plus kind of horizon, and that's how you make money in stock market. You don't make money by trading into stock market from a short to medium term perspective. If you really want to create wealth, you can get some profits, but if you want to create wealth, if you want to create value from your investments, then you have to look at stock market from a longish perspective. So to answer your question very simply, well, like I said, the more the pessimism, the more optimistic I get. So I remain optimistic. You know very well what levels we have spoken about on all these stocks in the past. And the very fact that, the order book, not only domestically, but even in terms of export is going to grow. That makes me more confident about these stocks, whether it is defense, whether it is power, whether it is railways, whether it is infrastructure.
Gaurang, my final question to you is, you have the responsibility of the P&L account at Geojit. And given the fact that STT has been doubled on hopes that it will curb FNO, what is your gut feel?
Well, I'll answer it on a more personal perspective because I don't want to answer this sitting in the chair of an employee of Geodit. Shall we all know in the last 6 months to 1 year, kind of cases that we've heard when it comes to vulnerable people getting, inexperienced vulnerable people getting exposed to the FNO of the world and the puts and the calls of the world. I have met people who don't even know what FNO or put on call is, and they have put money into these kind of trades, and then it is history to tell us. The unorganized, unsolicited international university of the WhatsApp and the X and the Y and the Z of the world has been great contributor to massed financial wealth destruction. And I'm not mixing any words. I'm absolutely clear about it. So whatever has been said by SEBI, whatever has been done by the Honorable Finance Minister yesterday, and more importantly, I think there should be some amount of discipline that should come in. I was in Nanded last week, Shell. I heard a story which actually made me wonder, how can people be so cruel? How can you commit a murder, a financial mass murder like this?
Okay, we'll pay an attention and thought to that even after we thank you, Gaurang. And right now it's time to wind up this special edition. Many thanks to you and to Rudra for sharing wonderful insights with all our viewers, as is always. Always a pleasure to host you both. We'll wrap it up at that note on market today, viewers. Markets just about 40 points lower in trade at 24,434. But we'll be back in just a few minutes with a new market master to share wonderful insights post the budget, strategies that you need to follow, what it means for you and for your investments. So stay tuned, don't go anywhere.